Hello and welcome back to the demo portion of Chapter 8. So Chapter 8, we got a lot going on here, right? We have accounts receivables. We know how to book accounts receivables from way back when, right? But now we introduce this idea of the matching principle and recognizing that, hey, all our receivables are not going to be collected. We know that. We're okay with that. But we need to account for that bad debt expense. So, for your homework, you need to do problems 8-2A, problems 8-4A, problem 8-6A, and problem 8-10A. In this video, probably going to break it up over two, but in these two videos, we're going to do the corresponding B problems. So, I'm on page 416, and we have journal entries for credit losses, right? And we're dealing with the Griffin Company. They have the following accounts on its books. So as soon as we start this year, we have accounts receivable of $130,000. We have allowance for doubtful accounts of $7,000. So they tell us that during the year, credit sales were $810,000 and collections on account were $794,000. The following transactions, among others, occurred during the period. So we need to prepare journal entries to record the credit sales, the collections on account, the transactions, and the adjustments. Then we need to show how the accounts receivable and allowance for doubtful accounts appear on the December 31st balance sheet. Easy peasy. So easy to do, okay? First thing we got to do is we got to recognize we had credit sales, right? Super easy. So what we're going to do is we're going to debit, I'm going to abbreviate and say AR, for $810,000. I'm going to credit sales revenue for $810,000. Okay? This journal entry is to record our credit sales. Okay? They also tell us that $794,000 of those transactions were actually collected on. Okay, I'm going to debit cash for $794,000. I'm going to credit AR. Accounts receivable for the same amount. $794,000 or $794,000. Now, right off the bat, I can figure out what is my balance of accounts receivable. Well, let's figure that out. I had $810,000. I collected $794,000. That means I have $16,000 left on my accounts receivable. Just based on these sales. That's it. Okay? So, let's go through and do our journal entries. And this was to record cash collected on account. Okay? So the first one they tell us is that we wrote off J. Wolf account, $3,000. So on January 11th, J. Wolf owed us money. On January 11th, we said, you know what? No way we're going to collect. Write it off. Not a problem. We can do that. Remember, what do we hit? We use that. We don't recognize the expense because we've already recognized the expense whenever we estimated what our allowance for doubtful account was. We hit bad debt expense, right? That has already been done. Now we're writing things off. So we need to debit allowance for doubtful account. Usually helps if you don't hit the okay. And this specifically, I'm going to put in parentheses J. Wolf, so we know who it is. We're writing it off, so we're going to debit allowance for doubtful accounts, $3,000. We are going to credit accounts receivable. And again, I'm going to put J. Wolf so we know who it is. Oh, you know who I mean. Sorry about that. 3,000, okay? So what are we doing here? Well, we're writing off the J. Wolf account to write off J. Wolf account, okay? Perfect. Now, on April 29th, wrote off B. Avery account for 1,000. Guess what? We're going to do the same exact thing, okay? So on 4/29, we're going to hit our allowance. Doubtful accounts. And again, I'm going to abbreviate B. Avery, or I'm going to put in the notation here, B. Avery. And we're going to debit allowance for doubtful accounts, B. Avery, $1,000. I'm going to credit my accounts receivable. So credit AR for who? Well, B. Avery. Same amount, $1,000. Perfect. No problem whatsoever. On the 14th, on the 15th of November, received $1,000 from B. Avery to pay a debt that had been written off on April 29th. This amount is not included in the $794,000 collections. Okay? So, we acknowledge that we had $19,000 worth of receivables. All these journal entries that we're doing refer to this $16,000, not what we collected on cash. So, on November 15th, we got to do two things. Number one, we got to reinstate the account. Number two, we got to recognize that we collected. So, the first thing I need to do is undo what I did on April 29th. April 29th, I debited allowances for doubtful accounts, B. Avery, credited AR, B. Avery. November 15th, I need to reverse that. So I'm going to debit AR, B. Avery for $1,000. I'm going to credit allowance for doubtful accounts, again, B. Avery. Okay, $1,000. What is this? What am I doing? I'm, reinstating the B. Avery account. Okay. Now, the next thing I need to do is recognize that he paid me. Cash, debited for $1,000, crediting accounts receivable, get it off the books now because he paid us for $1,000. What am I doing here? Well, I'm showing that I recorded collections. To record collections from B. Avery. Perfect. Okay. So the next one we have is on December 5th. December 5th tells us that we wrote off another account. We wrote off D. Wright. All right, D. Wright, peace out. So we need to get them off the books. 12/5. Oh, sorry. 12/5. How do I get it off the books? Well, I need to debit allowance for doubtful accounts, B right or D right, and then I need to credit accounts receivable, D right, to get it off the books. So debit allowance for doubtful accounts. Again, this is D right. For $22.50, and I'm going to credit. Oh, sorry. I'm going to credit AR D right. $22.50. Boom, done, off the books. What are we doing here? To write off D right account. Okay. So I apologize. The 31st, December 31st, in an adjusting entry, recorded the allowance for doubtful accounts at 1% of credit sales for the year. Okay. So what I need to do then is figure out what is my bad debt expense to record the allowance at 1%. So easy to do, right? It is. So we're getting our expenses ready for next, or for this year, right? What is our bad debt expense? So we're going to debit bad debt expense, because we're establishing it here. We're crediting allowance for doubtful accounts. For how much? Well, sorry about that. It is 1% of credit sales. What's our credit sales? $810,000. So I'm going to debit bad debt expense for $8,100. I'm going to credit allowance for doubtful accounts, $8,100. Okay. Now, Part B wants us to show how accounts receivable and allowance for doubtful accounts will appear on the balance sheet on December 31st. Yeah, on December 31st, okay? So in order to do this, what we're going to do, I'm going to come over here and I'm going to do a T account, right? So we know that we have our AR, and they tell us our accounts receivable originally was $130,000. Allowance for doubtful accounts is $7,000, right? So I'm going to say AR, and then I'm going to say allowance, okay? Okay. Now, in order to do this, I need to calculate what is my accounts receivable ending balance. I need to calculate what is my allowance for doubtful accounts ending balance. So we're going to start off with AR. And we're going to start off with come over here and do it. I'm just creating a T account. Okay, so I'm just going to go ahead and create my T account. That's all I'm doing because I want to show how the balance changed. Super easy for us to do. Okay, What was our beginning balance? Well, we started off with accounts receivable for the year for $130,000. Our allowance for doubtful accounts had a credit balance for $7,000. Okay, no problem. How much did I have in sales? Well, I had $810,000. How much did I collect on this? Well, I collected $794,000. Okay, we're cool so far. So I have my beginning balance. I have my sales revenue or credit sales. I have my collections. And then I need to figure out what are my write-offs. Well, how do I figure off my write-offs? Well, it's very simple. I can go back and look at all of my accounts that I did stuff to, right? I originally wrote off $3,000 from J. Wolf, plus I wrote off $1,000 from B. Avery, plus B. Avery came back in, then went out, right? So that cancels that out, right? Basically, I hit B. Avery 3 times, right? I got him out of accounts receivable, then I put him back into accounts receivable, and then I got him out of accounts receivable. So we're only going to count that once. And then I wrote off D. Wright. I have $6,250 of accounts receivable. What's my ending balance? Super simple to do. I had my beginning balance. I have my beginning balance plus my credit sales minus my collections and my write-offs. I have an ending balance of $139,750. That's my accounts receivable balance. I'm just going to plug that in. Okay? So let's look at our allowance, right? Well, we originally had a balance of $7,000. Okay? We had a write-off. Excuse me. We had a write-off of $6,250. We had a recovery of $1,000, right? We recovered $1,000. And again, if you're not sure, go back and look through your journal entries, right? Doubtful accounts. There's my $1,000 right there for B. Avery. So I need to include that. That's my recovery. And then I had the allowance for uncollectibles, the $8,100. Okay? So what's my balance for my allowance for doubtful accounts? Super easy, right? So I'm going to add my beginning balance, plus I need to add my recovery, plus I need to add the allowance for uncollectibles, minus my write-offs. I have $9,850. That's my allowance for doubtful accounts. So what is my net then for accounts receivable? Gross accounts receivable minus my allowance for doubtful accounts. My net is $129,900. That is how you do problem P8-2B. That's pretty much how you're going to do problem P8-2A. Okay? So the next one we have to do is our journal entries, right? for credit card sales. So this is easy to do. I'm going to go ahead and actually do this in another video because I just want to make sure each video has its own problem. So that way it makes it easier for you to go back and watch. Okay? So tune back in for our next video where we hit P8-4B.